Welcome back, ladies and gentlemen. We got plenty to talk about today because if you look around finance YouTube, you see a lot of very shocked faces. You see that there's a stock market crash, that stocks are crashing, all these things. And the thing is, just to frame this whole video, basically what I'm seeing is there's a lot of channels that are claiming that the stock market is crashing, but really what you're seeing is a crash in garbage stocks, okay? And you're also seeing some other indicators that we're going to see a big sell-off, but we'll get into that later in the video. So today what I wanted to talk to you guys about is just what I'm seeing in the market, and also basically what people are being conned into, okay? So everybody and their mom is trying to get in on Dogecoin, okay? Everybody and their mom wants to be in on the next 2x, 3x, 10x, stock. And nobody's sticking to the fundamentals. Nobody's sticking to the fundamentals, which is buy something that makes money and stack your wealth over time, okay? People are starting to forget that the way that you get wealthy is not by buying something, making $100,000 and turning it into $1 million. The way that you get wealthy is by working hard over time and just stacking the money up. So I wanted to go through a couple SPACs. SPACs are crashing. Also, I wanted to show you guys what the insiders are doing, because the insiders know what's going on with these companies a lot better than we, the public, do, a lot better than economists do. So if that sounds good to you guys, we'll get into this video. So the first thing, before we get into all those stocks that are crashing and all the clickbait that's going on, I wanted to show you guys my cash flow spreadsheet, because I just updated it and I wanted to teach you guys a principle, essentially, of economics, and it's the opportunity cost. $31,000, that's generating me $105 a month. So let's just assume, for the sake of example, that I'm making $25 an hour, okay? A lot of people that are in their late 20s, early 30s are making that, or at least that. So let's say that we're gonna take 105 divided by 25, right? So because of this portfolio, I save myself 4.2 hours a month, right? So that's not much, but the thing is, it costs $31,000. So the way that, a more poor mentality to think about that money is, what can I buy with it, rather than what can I control, what type of income can I earn with it. So let's talk about the opportunity cost, okay? So opportunity cost is essentially that which is foregone. So opportunity cost is the foregone benefit that would have been derived from the option not chosen. So essentially, you have to choose what you're going to do with your time. You have to choose what you're going to do with your money. So what I could choose to do with my money is I could take me and the girlfriend and we could go on a trip to Vegas, right? And that's going to cost us $7,100. I could go get myself a new car. Maybe I get a Camaro, okay? And I spend the rest of it. At that point, let's take out the calculator again here. And we've spent $31,000. Just going to estimate, divided by 25. That costed me 1,240 hours, okay? That's how you have to think about it. So let's divide that by 12. So that's about 103 hours per month. So check it out. This option over here, doing what I've done, which is getting the rents, getting the interest, giving the dividends and everything, it adds back 61 hours per month. So essentially that's like a work week and a half, right? That's how much I've added back to my life per month. Okay, but over here, if you take this option, you add 103, you're basically adding 164 hours that you have to work per week, or per month rather, to your life. So it's a big difference, right? And people don't think about it in terms of how much time am I actually adding? How much time do I have to work per month because of my decisions? Because people think about the money game in terms of what can it get me into, rather than what can it get me out of. What I wanted to tell you guys is essentially that, right? That a lot of the rich mentality is to think of money in terms of your time. So your money and your time are the same thing. I talked about this in the last video, that whenever you're buying something, you're actually selling something. When you're buying dollars with your time, you're selling your time. So if you're buying a stock with dollars, you're selling your dollars, you're getting ownership in the company. If you're buying gold, you're selling dollars, you're getting gold. So there's an opportunity cost with that. I saved myself 61 hours a month just because I made certain decisions. So those decisions weren't conceptually difficult, but they did require some discipline. So a lot of people tell me that I'm wasting my time by being an investor, by doing all the things that I do, but really you're saving your time. It's kind of like that movie In Time with Justin Timberlake, where they had the time on their arms, right? So if you treat your money as if it's your time, because it is, then you will start to think about your money differently. So anyways, I just wanted to say congratulations to myself, and I want to thank myself, you know. I'm just kidding. That was a bad joke about like Academy speeches. Let's go over to the main topic of the video. Okay, we're going to talk about these SPACs. Okay, so these SPACs are crashing. All right, look, this is Shift Technologies. It was all the way up to $10. Looks like it hit 13 over there, and then it lost 50% of its value. Moving on to the next one, Churchill Capital. If you bought in over here, you bought in at $30, and it lost 33% of its value. Looking at this again, Palantir went up to $39, it went up to $38, and now it's sitting at $28, or $22 rather. So you essentially lost almost half of your money. Once again, over here, Coinbase, you've lost 9.7% of your money. Check this out. If you bought into GameStop in the past month, you lost 27.7% of your money. AMC, if you bought in the past month, you lost 30.02% of your money. Zomedica, this is one that sells in the marijuana space, I believe. 59% of whatever you put into Zomedica, you lost in the past month. You look at Dogecoin. If you bought up here at 42 and you sold down here, you basically lost half of your money. Open Door, another popular one. If you bought this one in the past month, you lost 29.98% of your money, basically 30% of your money. ChargePoint, another SPAC. If you bought into that one in the past 3 months, you lost 46.63% of your money. The list goes on and on. Hyliion, 46% of your money. Virgin Galactic, last month, 27% of your money. So to contrast that with these companies that I actually invest in, these are companies that actually make money, right? These are profitable companies, proven companies. You see that I've got them listed from the biggest gains to the smallest gains. So Apple, Facebook, Bank of America, Disney, Starbucks. None of these companies are crashing, okay? You see the only ones that I've lost money on is Amazon, which is a great company, and these two oil plays, which I bought at the top of the oil market. Everything else is in the green, okay? Because as we pump more money into the system, more money is going to be made in the stock market because people are getting rid of their dollars and they're just buying into whatever they can. And the last thing that I want to show you guys, which is actually the most important part of this video, is insider sell to buy ratio. So check this out. This is the beginning of the pandemic over here. We see the S&P 500, it crashed, but look at what insiders were doing. Okay, so this is the 3 months insider sell to buy ratio. So if you see this going higher, that means that there were more sales than buys. If you see it going lower, that means that there were more buys than sells. So check this out. All the way from right before 2020, they started to sell. So what does that tell you? That tells you that they probably knew something was going on, right? This is when, so in March is when, like March and February is when they actually announced that the pandemic, like the lockdowns and all that stuff. But insiders were selling way before that. Look, this is 2019. Insiders started selling and selling and selling. And then when everybody else started selling, whenever the market started selling, look at what insiders started doing. They started buying all of those shares. And now look at what they're doing. They're back to selling. Okay, so that should tell you something. Check this out. All right, this one is super important too. This is Coinbase. Okay, look at what insiders are doing with Coinbase. $1.4 million of sales. $400,000, 11 million. This guy's selling. All these Coinbase investors are selling. All right, and then we go over to insider buying. Notice how there's no Coinbase. None of the insiders are buying Coinbase. All right, they're buying other stocks, but they're not buying Coinbase. So if you're buying Coinbase, I'm not saying that it's a bad stock, but you do have to pay attention to what the insiders are doing because they've been right pretty much every time. Going back to this graph, look, they were selling when it was expensive, right before it became cheap, and then they were buying right before it became expensive. So if you don't think that billionaires know more than we do, then you trust the system more than I do. That's all I'm going to say about that. So in conclusion, stocks are not crashing. The garbage investments are crashing. That's what's going on in this market. So I would just, what I'm doing right now is focusing on USDC. You can earn 8.6% on USDC right now. So I'm focusing on stacking some cash. I'm looking at real estate. So maybe when I get back from the deployment, possibly buying up another property. The stock market looks extremely overvalued in many ways and by many metrics. So I'm being a little bit more cautious, focusing on these companies that make a little bit more profits, pay out a little bit higher of dividends. We'll have to see where inflation goes, and we'll still have a market review coming tomorrow. But I just wanted to make sure that everybody knows that, like, everybody and their mom's trying to get in on Dogecoin, SPACs, things that are going to go up overnight, but that's just not the way, okay? And there's a lot of red flashing signs right now that say that we shouldn't be doing that. But anyways, hopefully you guys liked the video. If you did, make sure you give it a thumbs up, and I'll see you guys in the next video.